you for that warm welcome, and thank you, NASSCOM team, for having me. Good evening. We've all been looking forward to this discussion, and as you'll see, we have an amazing panel who are joining us from Bengaluru, Singapore, and Hong Kong. And between us, we're going to try and pack as much collective insight as we possibly can in the next half an hour or so, in terms of, as Jaya said, going global, but in terms of also technology-led innovations that have made the most impact on financial ecosystem and how that ecosystem itself is evolving in terms of capabilities, products, and some new and interesting partnerships. It's my absolute pleasure to invite to the stage our first panelist, Rahul Chari. Rahul is co-founder and chief technology officer of PhonePe with over 20 years of experience. Welcome, Rahul. Building world-class tech platforms and dealing with hypergrowth. Rahul has been at the forefront of digital payments, commerce platforms, embedded systems, and enterprise software development. Rahul's specialties include digital payments, supply chain technologies, digital media platforms, fiber channel protocols, storage virtualization, SAN architectures, and data center storage applications. Thank you, Rahul, for joining me this evening.
Thank you, Sachin. Very excited to be here.
Thank you. Let me go to the second panelist. So our second distinguished panelist is Deepak Sahoo. Deepak is the regional CIO for Generali Asia, a member of Generali Asia's management committee, and a board member of Generali's digital and data-driven distribution venture in India. A senior leader in insurance, Deepak has worked across Asia Pacific and Europe in various leadership roles, driving technology direction and strategic transformation for several global large insurers. Welcome aboard, Deepak.
Thanks, Sachin. Glad to be here.
And our third and final fellow panelist is Srikanth Raju. Srikanth is General Manager, Commercial Software Engineering for Financial Services Worldwide at Microsoft. And in this role, Srikanth leads software engineering engagements with global banking, capital markets, insurance, and fintech customers. Prior to Microsoft, Srikanth spent a couple of decades as a global high-tech industry executive with engineering and developer ecosystem leadership roles in Borland, Oracle, Sun Microsystems, and Nokia. He's lived and worked in the US, Finland, Brazil, China, and now Singapore. So it's my absolute privilege to welcome you this evening, Srikanth.
Thank you, Sachin, and it's awesome to be here.
Thank you, guys. Thank you, gentlemen, for joining me this evening. Thank you to all the participants. We're going to try and make this engaging and hopefully a bit futuristic discussion, but grounded in today's reality and interspersed with some examples to bring it to life. So here's how we intend to flow. I'll make some opening remarks to sort of set the scene and offer a bit of a point of view. I will then invite each panelist to share their perspective with one key question relevant to our Fintech Summit theme. After that, we'll try and make it a little bit more interesting with some rapid fire questions where each panelist will have 60 seconds or less, and then I will conclude. So that's the game plan. Let's get right into it. To set the scene, I believe that there are some new paradigms and some very interesting and emerging use cases that are truly transforming the whole fintech ecosystem right now. The first paradigm is that a much higher percentage of tech today is transforming user experiences to be faster, better, more secure, more compelling, more differentiated, immersive, and highly customized. The second paradigm is with flattened access to talent. The war on talent just went global, and it has completely redefined location strategies in today's low-travel, socially distanced world. And as a direct consequence of that, everyone embracing new ways of working via collaboration tools, virtual collaboration tools for ideating, strategizing, solutioning. The third new paradigm is that customer experiences around time to market just went up by orders of magnitude. So months to weeks and weeks to days. And then finally, as COVID exacerbated the already existing digital acceleration and innovation, consumers have finally crossed the chasm of trust deficit and I'm sure you'll hear more about this from Rahul, with digital financial transactions. So that's the fourth paradigm. And there's many more, but in the interest of time, these are the four that we sort of decided to ground our session into. My second point is that arising from these new paradigms, right, there are some very interesting use cases. So for example, contactless, right? So NFC-enabled cards and NFC-enabled ATMs, for instance. We at Fiserv have built device labs on cloud to virtually test these ATMs and card readers and mobile devices. Another use case is for large and complex transactions, payments. We have patented biometric multi-authentication. So for example, right thumb, retina, and left index finger, as an example. Another use case is video KYC with AI to detect deep fakes to make customer onboarding more secure, informed by a technology called GAN, or generative adversarial networks, neural networks. Another new use case in e-commerce is the use of hyper-personalized AI-driven recommendation systems to influence individual customer behaviors. And there are many such emerging use cases, which brings me to my final point before I open this discussion for the panel. And that is, as a result of these new paradigms and these new and interesting use cases, the whole ecosystem around banks, insurance companies, big tech, and fintechs is evolving, creating some new partnerships and new alliances, not just from a go-to-market perspective, but from a solutioning and delivery to greater value together. By the way, by big tech, I'm referring to the Google, Apple, Netflix, Amazon, Alibaba, LinkedIn, Facebook, etc. Now, historically, banks looked at fintechs and said, you don't have the license to operate. And fintech said, yeah, but you are not as heavily regulated. We are not as heavily regulated as you are. And then banks said, yes, but we have the scale, the muscle, the brand permission, the network incumbency. And the fintech said, yeah, but you also have a high cost base and legacy tech, whereas we are nimble and digitally native. And so my point of view is this us versus they has been largely replaced by banks, insurers, fintechs, and big tech all coming together in new and innovative and symbiotic ways, building relationships. And that's what makes this interesting this evening, this discussion very interesting this evening. So I'll stop there. And with that backdrop, let me open this up for discussion. So let's go to Rahul. Rahul, are you ready?
Sure, Sachin.
Okay, great. So I have a question. It's one question, but in two parts. First, how are you delivering faster, more secure, and frictionless digital payments across the channels for your consumers, whilst constantly enhancing the whole engagement and the experience? And the second part of the question is, can you talk about what technologies are you leveraging and how are you differentiating yourself? Thank you.
So thanks for that, and thanks for the wonderful introduction as well as setting the stage for this conversation. Very excited to be here with Srikanth and Deepak. I think that question really comes down to who we are, and we are really a pure technology and platform company at the core. Our DNA is tech, and our ambition is the combination of those two. And an ambition is to be the largest financial tech platform in the country that is enabling a wide variety of businesses and practically covering every consumer's interaction with money in that journey, right? So the canvas that we are painting on is really very broad. But the fact remains that we are a technology company and therefore we think through technology. So really the question about how we are able to actually build payments at scale with security, with a high level of reliability while continuing to actually create more new experiences as well as go deeper in every experience comes down to really two parts. One is about how we organize ourselves from a technology perspective, really our technology blueprint, if you may call it that. And the second one really comes down to our approach to technology investments. I'll answer this in both those buckets. And I think it will also kind of answer the second question of some of the technologies that we use and how we think about it. So the first part of how we organize ourselves really is that because our ambition is to actually build these wide variety of experiences, verticalized businesses, and for the lack of a better word, simply use cases that are catered towards completing the consumer's money journey on a daily basis, we actually say that there are verticals and there are horizontals. For us, payments at its core is a horizontal risk and fraud detection is a very important horizontal investment. Whereas if you think of use cases themselves, like InsurTech is a vertical, right? Investments is a vertical. Pure play offline payments is a vertical. And we actually dissect ourselves as an organization also exactly like that, so that there aren't any conflicting interests towards, do you build the core platform the right way in a scalable fashion, or do you go with market meeting products at the fastest rate possible? By this clear division, what happens is our investments in scaling out our core platforms continue agnostic to what are the use cases that we are building. And our choices there are never short term. We, in fact, have a philosophy that we do not consider core capability building as intra quarter or sometimes even an intra 6 month goal at all. Because my core belief is that if you build right and you have to actually build this in a manner that it's future provisioned, you have to take time, right? And we actually divide our investment in the core platform side into a fair amount of exploration into the kind of technology choices that we are making. Make sure that those technology choices are as general as possible from the level of future proofing that we are aware of in terms of upcoming use cases, scale, investment by the community into an open source stack that we are adopting, and then go on to a clear design and architecture phase where we actually bring it together in terms of, are the core design patterns that we are using common? Is the choice of a new technology stack that we are bringing in justified? For example, if one of my engineers do come in with a request to say that we want to bring in a new database or a big table technology, I question it not once, twice, but thrice, because it becomes an important choice towards both the maintenance of the stack, the investment into the stack, etc. So I think that organization is extremely important. The second one is the investments that we are making, right? From an investment perspective, it's my job specifically and all the engineering leaders in the organization to see what are the future investments that we make. And we try to take a 2-year view to that. UPI was actually a kind of investment that we made well before a lot of the sector even believed in UPI, right? It was a very, very big bet. Similarly, in terms of the future of KYC, the future of AI, moving from being purely ML driven today to actually getting to personalized data at scale, at the edge itself, moving to edge compute and intelligence at the edge instead of looking at aggregating as much data as possible in your servers to be able to drive intelligence. These are some of the investments that we make, not with the view of what is the value it delivers here and now, but more with an R&D perspective. And this one is an arm that is even further dissected from the core platform scaling as well as the vertical solutions. Blockchain is another example, right? I think blockchain has been so centered around cryptocurrency that the real value of blockchain has not been brought forth yet in most of the fintech platforms. Now, to look at how can blockchain be leveraged, especially with compute getting cheaper and faster for a platform like ours, is an R&D initiative that we take, not with a here and now view. So I think that's broadly how I would summarize our approach towards being able to actually scale very rapidly, be reliable, be fast, and yet deliver on new experiences.
Fantastic, Rahul. And I mean, it's amazing how many different technologies you've coalesced into delivering the outcomes for your customers. So fascinating.
At the same time, we try to keep as much homogeneity as possible. We actually experiment and reject more than we actually take into production, which is also a very important point.
Absolutely. Srikanth, Deepak, did you want to add anything as a comment on top of Rahul?
I think, Rahul was obviously spot on with the focus on actually delivering the right kind of experiences for the customers by coalescing the right kind of technologies. I will hit on it more when I speak to my point, but it's a great insight from Rahul.
Sure. Thank you. Deepak?
Yeah, I think similar views. It's good to see the perspective from the other side because, I come from a traditional, organization background. So we look at fintechs and we see that, what can we learn from them? And it's always good to see that the fintechs, the way they talk about technology, the way they're passionate about the technology, and then the way they use the technology in disrupting the markets, which is really good, because these are the things which we lack, and we see that as an opportunity for us to partner. And I think subsequently we will discuss a little bit about, or probably we'll talk about, it's you mentioned us versus them. It's actually, we are in it together. So it's a symbiotic relationship between, let's say, the fintechs and the traditional companies, and the fintechs would need the scale, and the traditional companies would need the cutting edge of technology. So I think that part is really interesting.
Yeah, no, very true, Deepak. And this just reminds me of an example, Rahul, in your industry. So P2P payments, which is all too familiar to you. I mean, if I go to the US, several large banks have come together, like Bank of America, BB&T, Capital One, JPMC, US Bank, Wells Fargo, and they've created this company called Early Warning Services, which is basically a network called Zelle. It's a P2P, real-time payments app, right? And Fiserv happens to bring all the capabilities to participate in that network. So, single point settlement, real-time money movement, fraud and risk, pre-built, UI, stuff like that. My point is, though, it's a consortium response with a network effect that I find quite interesting. And this goes back to, I think, the summit theme that we have for today. But let me transition to you, Deepak, with my second question, which is, the global insurance sector has been leveraging AI from inquiry to handling claims processing to innovative risk pricing. And I'm sure you know a lot more use cases, as to where AI is effective. My question is, what new technology-led innovation has emerged during this pandemic, and in what ways does that innovation transform customer experiences more broadly?
Sure, Sachin. Thanks. That's a great question, and I think quite thematic at the moment, given that we are still in the middle of a pandemic. I think there's a very nice meme that I had seen, on the internet. Somebody said that, who is driving the digital transformation of your company? Is the chief digital officer, chief information officer, or COVID-19, right? So, and everyone said that COVID-19. But to be, to put it in the right perspective, what I have seen is it's not so much as the new technologies. In fact, I look after about 13 businesses across 8 countries, and almost across all the countries, what we have seen, we had developed and rolled out a lot of digital tools. The adoption of these tools have significantly increased during the pandemic. So, and to answer your question specifically, tools like tools that facilitates doing the transaction remotely without being in the whether you're in an office or you need to walk into a branch or anything. So, I mean, insurance typically is seen as a very traditional industry, right? I mean, it is insurance is sold. They say that insurance is never bought. I mean, you're not going to wake up in the morning and say that, okay, today I'm going to buy an insurance policy. No. So someone is going to sell you an insurance. Now, it's a very, and because of the nature of the business, it's a very relationship-driven sales process. So there is an agent which is going to go and sell it to you. And that needs a lot of personal touch. It's a personal connection. And so during the pandemic, we realized that the agents are not going to meet up with these people. So how can you, mitigate that? How can you still be able to sell? How can you still be able to build that emotional connection with the customer, even if you're not meeting the person personally, right? So that was a key, so we did everything possible to make it as seamless and as, let's say, human, as emotional as possible. And I think that's where the data played a large role. Why I'm saying data played a large role is because, when you say touching someone, insurance is a very emotional buying decision. So the more you know about the customer, the better it is for you to build that emotional connection. And the more you know about the customer is all built on the amount of data that you have. So everything that we do today is built on data. So I always used to say insurance companies are data rich, but information poor. So we try to mitigate that. So we try to use the data available with us to, I would call it, personalize the information about the customer. In fact, we are now moving towards hyper personalization, I would call it. Right? So you talked about, or you asked me about new technology. We're working on Internet of Things. We're working on, let's say AI. We're working on, giving an example, AI. We are using AI in fraud detection. We are using AI in personalization. You're using AI in risk, measuring the risk, or moving away from a risk, building the risk profile based on a group that typically insurance companies do, to how can we measure the risk of an individual based on that individual's risk profile. You're getting it. So that's where we are moving to. And underneath all of this is data. So, we set up a company in Europe. It's a IoT company. So the primary reason of that is to collect, or this is a company which actually provides services to other companies. It could be other insurance companies as well. And we build those connections where, depending on whether it's a smart home, or it's a smart car, or it's a telematics, or your wearables. So the data is being collected, and the data is being used to provide a meaningful information or meaningful results back to the customer. And in the process, we're building a close connection with the customer. So that's what we are focusing on right now.
Thank you, Deepak. And your point about emotional connection and insurance is an emotional decision really resonates. With an eye on the timer, I'm going to transition. We've heard two transformative industry perspectives, right? One on digital payments from Rahul and insurance, and how technology-led innovations happen. Let me move to Srikanth. So Srikanth, question for you. Emerging technologies, obviously, AI, cloud, big data. We're hearing a lot about virtual and augmented reality these days with 5G coming in, etc., blockchain. All of these technologies have an amazing potential to make the world a better place and to transform really the ways in which we learn and play and do business. What's your perspective on how the ecosystem will evolve, and what kind of new experiences and outcomes do you foresee as a result?
Thanks, Sachin. When you led this panel, you started off in your opening remarks about some of the challenges and some of the opportunities that the industry as a whole is facing around the world. And me, as having come from platform and technology companies, Oracle, Sun Micro, Microsoft, and then the platform aspects of devices companies, I've been having these conversations with developers and companies all over the world. But the one thing that remains very, very central, it's not about the technology. It is about what the technology can actually do for a customer and for the consumer. And that's the sweet spot that we as a technology company, or we as the ecosystem players, whether you're an ISV like a Fiserv or a fintech like Rahul's organization and so forth. So, for example, when we talk about the FSI industry, then we work with banks, capital markets, that are handling whether it is institutional investments or individual investments, or insurance companies around the world, and they are focused on handful of critical scenarios, if you will. The beginning with you started talking about how some of the institutions may have some legacy investments in data, legacy investments in their IT infrastructure and systems and applications. And they are in the process of, as part of the digital transformation journey, they are about to modernize that. They want to bring about agility, and they want to bring about performance. They want to bring about new architecture that is going to provide significantly improved benefits to the customers. Apps, the database culture from traditional architectures, the data-driven cultures that Deepak was alluding to from an insurance perspective, and to shift that to a more concrete customer benefit. We are talking about more personalized customer experiences, i.e., taking a traditional institution, traditional financial service provider into a digital service provider, like a digital bank and a digital insurance, where a customer just goes in with the expectation that things are going to be so much better because the systems understand who they are, what their preferences, how they like to do their things, whether it is banking or working with an insurance agent and so forth. That personalized insurance, and I'll give you an analogy. I was speaking with, for the sake of anonymity, I won't use the organization name. It's a large financial institution in India, and I was meeting them in Sibos conference, which is the world's largest financial services and banking industry conference. And they were telling me, Srikanth, at the end of the day, a bank is a bank. We do the same services. People put money, they take money out. We manage investments. We want to give better products to the customers depending on their needs. But that's what everybody does. But where they want to add value is in these areas, like providing the digital access, knowing the customer before they walk into a branch and giving them the digital experience and having that knowledge about it so that they are able to predict and they are able to work with the customer's preferences to give them the services that they want. Along with that comes services such as fraud detection, financial crime detection, evaluating creditworthiness of an individual and giving them the right kind of products to meet with their lifestyles and so forth. So at the end of it, there are going to be a confluence of technologies. And we've been talking about a number of those technologies, whether it is in applying AI, in combating financial crime, or in risk compute and risk mitigation, or in putting significant cloud investments to modernize your infrastructure and the IT firms and so forth, providing the multi-cloud architecture so that there is a seamless integration into the next generation of digital transformation. All those technologies become relevant at different points of time. But our conversation as a technology provider is, we try not to lead with, here is an alphabet soup of all these technologies, and then, how do we make these technologies work for you? It should always be the other way around, saying, what is it that we are trying to do? What are the digital transformation goals that the organization is trying to achieve? And how do we apply the different technologies appropriately, working with the different regulators? Most importantly, partnering with the ecosystem players like the fintechs, like the ISVs, because the point that you made at the very beginning is more true now than ever before, which is, it is never about us versus them. It is about partnering. It is about working together, because the agility that the fintechs bring, if every bank needs to be a digital bank, it needs to happen today. And the only way it can happen today is by partnering with the right kind of ISVs and the right kind of fintechs. And that's what we are seeing in the industry. I'll stop there for the sake of brevity.
Thank you, Srikanth. And you've just given a very nice segue into our rapid fire round. So I'm going to go straight into rapid fire with an eye on the timer. So let's pick up the pace. 60 seconds each question. All of you answer one by one, and I think the sequence would be, I guess, Rahul, Deepak, and Srikanth. So let me go to the first one. Following from your summary there, Srikanth, ecosystem, right? So some of the world's biggest banks and insurance today are spending billions of dollars to set up research facilities and innovation labs and incubators as they develop close sort of working partnerships with fintechs. How do you see this evolve in India, in Asia Pacific, and worldwide? Rahul. Rahul, you may be on mute.
I think everybody is very clear in terms of this being the time about partnerships. I think everybody, including the fintechs, who are probably on their high horse about technology leading the way and everything falling in place, as well as the more traditional institutes about saying that, hey, we are an age-old industry, we understand our business. By the way, technology can be outsourced. That's a thing of the past. We've all come to the realization in a very positive way that each one has a strengths and each one recognizes the strengths that the other one brings to the table. And the way forward is through partnerships. I think that has been proven, not at scale yet, but proven across the world, whether it's India, whether it is Asia Pac, or whether it's out west, as the only way forward. Now, with that, I think it's important to actually also rationalize what are then therefore the right investments that we make in-house, and what is the cost benefit analysis is the cost benefit analysis on that being done right, and that again should be tied back to your core DNA. So I think if it adds to your core business in a manner that it is able to amplify that business from its own capability, 100% that investment has to be made. But if it comes down to saying that ultimately this is not really necessarily our core strength, but can add a significant value if we partner, I think that should then be a decision made about saying that this is more a partnership driven value versus an in-house invested value. I think that would be my answer.
Well said, Rahul. Deepak?
Yeah, I think it depends on the organization's operating model. I mean, I know of organizations which run their own, innovation lab, and some of them have succeeded, some of them have failed. We do it slightly differently. In fact, we have a company called House of Insurtech Switzerland. So we created a company, carved it out of our Swiss business, and then run it as a startup kind of company. But we also have partnership with a lot of startup companies, and we work with them closely. We bring them, we mentor them, we provide them platform to scale up and test their technology. But above all, we also have created a innovation fund. So I actually sit on the innovation board of Generali at a group level. So we created this fund where we actually encourage all our staff across the group of 70,000 staff to pitch for this innovation fund. So it's about it's an annual affair, 4 times a year. Start with about €5 million, but these are co-funded. So which means any of those business units which is actually pitching in for a particular idea, then it will be co-funded, because we don't want this to be a funding exercise for a project funding. It has to be there has to be skin in the game. So and we have seen that working extremely well. So in the first year, which was in 2020, and we had 4 cohorts, and we funded about 60 ideas, and they were some of these ideas are fantastic. Like we are creating a blockchain-based ecosystem for art insurance. So we have created a blockchain-based ecosystem between employee benefit platform, brokers, and insurers and reinsurers. So these are some of these ideas. So these are, and what we also do is we fund, but we also see how exactly these companies are, or these ideas are progressing. So in a nutshell, I think it not be one or the other. It could be a mix of both, mix up all, or it could be some of the companies that I know, our competitors, some of them have succeeded really well in creating innovation labs, and some of them actually haven't done well, and they have shut down the innovation lab as well. So to each its own, whatever works for the company.
To each its own. Srikanth?
I'll keep this short. As we know, world is flat, and so is this industry. And along with that are the opportunities and the challenges faced by the ecosystem players in this industry. What I mean is there are hubs in the world for technology talent, and India is a chief example of one of those markets where you do have the talent. And clearly, the financial institutions around the world have created development centers in India, and a lot of innovation happens there. And from our experience, like my own teams, comprising of developers and engineers from India, Australia, Asia, broader Asia, like Hong Kong, Singapore, along with people from the US, are working and coding with engineers from top bank in Australia, in triangulated with a solution provider from Belgium and Western Europe. So it is that juxtaposition of and the triangulation of all of them to solve a problem for a customer, putting customer first, is something that will have to be the way how we approach things as ecosystem players as we look ahead. And that's the way we will be able to raise the tide and raise all the boats with it. in India, Asia, and the rest of the world. And it's happening as we speak today.
Thank you, Srikanth. I'm just going to add a 15 seconds quick reflection on something, Rahul, you said, DNA. We actually have something called DNA App Store, and it's a public online marketplace for collaborative innovation. So the point I was making was, it's interesting that there are examples of ecosystems where multiple technologies come together on a platform that makes innovation and sharing of ideas simple. And it's not just about incubating inside the firewall, but it's actually allowing third parties and developers to promote and sell their apps, and with all kinds of revenue shares, in this case, on that platform. So I think we only have time for one more question. So I'm thinking which one to ask. I really wanted to ask you a question about regulation, and wanted to ask you a question about the generational difference between clients. Maybe I'll go to that one. So as you and your clients innovate digital products and services, how do you see consumer preferences change from Gen X to millennials to Gen Z, and how are you using technology to solve for these rapidly changing consumer preferences?
Very quickly, I think the attention span that we are having of people in terms of both patience as well as attention span when it comes to giving you the trial and making a judgment call based on the trial of whether to proceed or not is continuously shrinking, right? And it is obviously also driven by technology, because we are throwing anything and everything at them on a very regular basis. So the only solution towards that in terms of being able to get your user research right, or the silver lining, is also the amount of data that you're able to amass in a very short time or at a very large scale. So being cliched answer, but being extremely data driven, and at the same time extremely aware of the fact that attention spans and trials are shorter, compartmentalized, and shrinking continuously is the only way to tackle this problem.
Thank you, Rahul. Deepak?
Yeah, I think we do see a difference between the generations that you talked about. Obviously, Gen X, the way they approach technology platform or adoption of that is very different from the millennials, right? Unfortunately, you can't have one size fits all, or you can't have different technology platforms for different generations. So, the way we approach is, I think Rahul did mention about data. So we use data significantly to personalize some of the services. So instead of focusing on the technology platform, we focus more on the service aspect of it and how we use that to touch the customers and provide them the services that they are looking for, and how it can be more and more personalized. So that's how we have been trying to address the generation of the customers.
And Deepak, you talked about personalized. I belong to Gen X. I guess some of us on this panel are part of Gen X, and I call our generation point and click, right? Mouse point and click. And the millennials just 10 years down the road are what I call pinch and slide, because they're constantly touching touch screens and sliding. Whereas the Gen Z, when I talk to my daughter, she expects devices to respond to her hovers and gestures. So I guess we say digitally native, but every few years the expectations around what is digital native itself seems to be evolving. Srikanth?
Very simply put, you are absolutely right. The needs are going to be changing on a regular basis. In addition to the gestures and touch and everything, there will be voice-activated responses, and then pretty soon, non-prompted actions that will be expected as part of day-to-day interaction with these devices and services. Our goal at Microsoft as a platform provider is to listen in each industry to players such as all of you in the panel, as well as our audience, whether you are a bank, or you are a service provider, or you are a fintech and the insurance company and what have you, and see how best we can have our cloud in one place, whether it is our Teams cloud for customer interaction and the employee interaction, or our workflow cloud through our Dynamics, or platform cloud with Azure, and make that work for you. And that's where our focus is as we go forward.
Fascinating. I feel we covered a lot of ground in a very short period of time this evening. I'm going to wrap up. I can throw lots of stats at you, but in the interest of time, I'll just say that India is already the fourth largest fintech ecosystem in the world. I think Jaya, talked about unicorns. I'm confident that in the next 3 to 5 years, we'll give birth to several more unicorns because we are the hotbed of innovation relative to new use cases and the evolving ecosystem that we talked about. I feel privileged to be working for one of the largest fintechs and just fortunate really to be part of the journey in financial services industry at this inflection point. I cannot thank enough our panelists, so Rahul, Deepak, Srikanth, for your time, your perspective, and your insights this evening. Thank you, NASSCOM team, for having us here today. And thank you, everyone in the audience. I wish we had more time to do some Q&A, to do justice to all your comments and questions. We've been watching as the chat board was lit up, but thank you for all your comments and feedback.